we could do nothing. And if we do nothing, and that's actually okay for a trader that's just getting started. Maybe I don't need a lot of tax advantages.
Well, if you're a brand new trader, you're 18 years old, or you're a young kid, and you're making $5,000 or $6,000 a year, and that's all that you're making, it's okay to do nothing at all for an options trader. And even if you're a brand new trader, because let's say you're just now getting started, you don't have to do something right off the bat to get started in the stock market. If you get started and your first trade's not going to be closed out for 1 or 2 or 3 months, you don't have to do everything that's out there. You can just do like Don's saying here. You can just do nothing at all if you want. It's not going to affect you that much. Maybe you're going to have to pay another $45 in taxes that year because you got structured 2 or 3 months late. But usually, as you get into this and you start saying, okay, if I'm going to be making over $10,000 a year in profits through trading, which isn't that difficult, then at that point, you really want to make sure that you've got some type of structures in place.
If we do nothing, you can deduct your brokerage fees and the cost of trading. What you can't deduct is because you're the owner and you really don't have a business, you're not a full-time trader, you can't deduct computers and trading and software and your cell phone, your internet, all the expenses that may go along with the business, because frankly, you don't have a business, you're simply trading your own brokerage account. Option number 2 was to qualify as a trader, but the problem with qualifying as a trader is that the IRS has issued really arbitrary guidelines as to what constitutes a trader. Here's what the IRS says. Here's the 3 requirements, and look at this and tell me if this is arbitrary. You must seek profit from a daily market movements in the prices. It has to be continuous, regular, and substantial, but they never say it has to be 361 trades or 1,000 trades. They leave it in this arbitrary term that all they say is it has to be substantial. So if you can't qualify as a trader, what option do you have? And Mike, you just nailed it. We create a business for the intent of trading. Yeah, I'm sure you can qualify as a trader, but you have the C corporation so that you don't have to meet that qualification.
That's correct. Yeah, and just like you said earlier, what if you think you're doing anything correct and the IRS just says no, just because it is so ambiguous and you just don't know if it's correct or not? They say no, you don't qualify. I mean, set up your C corporation in less than a day and it's done, and you don't have to worry about it ever again. And you know at that point that you're compliant all the way through. It's going to be simple. There's no headaches at nighttime. You can sleep at nighttime. So get it right from the very beginning. It takes you a day.
By using the combination of the corporation with a limited partnership, you can achieve both asset protection and really good tax advantages. And let's kind of discuss how that works. Your corporation, what it does is it manages the affairs of the partnership for a reasonable fee. Well, what's reasonable? Again, the IRS doesn't really define that. It just says it has to be reasonable. And all of this would be explained in your management agreement. And that's normally, it's going to give the corporation authority to trade. It's going to spell out what the fees for services are. There's going to be a disclaimer of losses. If Mike were managing my account, you would have all those things in here, wouldn't you, Mike?
Yes, that's correct. You have to spell out the document.
The only concern that I have is that if there's something in writing, which there needs to be, that you follow that management agreement.
No, and you can go back and change it however you want, because both sides of that are through your participation. So you can change that at any time to whatever you think is necessary to make it happen correctly.
Absolutely. But if we have the corporation in place, now all of a sudden it can deduct computers and internet and cell phones. Do you need a cell phone to trade? Well, I can argue that you would. Do you need software? Do we need training? Do we need health insurance? All these types of things could be deducted, but we deduct it out of the corporation. The structure allows the corporation to deduct expenses that you can't deduct as an individual investor. It also allows you to reduce the gains at the personal level, move them up to the corporation, where now I can deduct things that I couldn't deduct before. It's kind of a perfect scenario. It's a very flexible system.